Today, we're breaking down VTI, the Vanguard Total Stock Market ETF, one of the most popular ETFs in the world, and a fund designed to give investors exposure to virtually the entire U.S. stock market in a single investment. If you've ever wondered what it looks like to own almost every publicly traded company in the United States, VTI is about as close as you can get. VTI seeks to track a market cap-weighted index that represents nearly the entire U.S. equity market. Instead of focusing only on large companies like many S&P 500 ETFs do, VTI expands much further down the market capitalization spectrum. The fund includes large cap, mid cap, small cap, and even micro cap companies, creating exposure to roughly 100% of the investable U.S. stock market. In total, VTI holds thousands of stocks, making it one of the most diversified equity ETFs available. The portfolio includes household names like Apple, Microsoft, and Nvidia, but it also captures thousands of smaller companies that rarely appear in traditional large-cap indexes. That broad exposure means investors participate in the growth of both the biggest corporations and the emerging companies that could become tomorrow's market leaders. The fund uses a free-float adjusted market capitalization weighting methodology, meaning larger companies naturally receive bigger allocations in the portfolio. Because of this structure, the largest companies in the U.S. economy still dominate the fund's top holdings, but smaller companies collectively represent a meaningful portion of the overall exposure. VTI tracks its benchmark using a sampling strategy, which means it doesn't necessarily hold every single stock in the index. Instead, Vanguard selects a representative sample of securities designed to closely mirror the index's characteristics, including sector weightings, market capitalization distribution, and financial metrics such as price-to-earnings ratios and dividend yields. This approach helps the fund efficiently track the index while keeping trading costs low. The index itself is reviewed quarterly, allowing new companies entering the market to be added and companies that no longer meet the requirements to be removed. This keeps the portfolio aligned with the evolving structure of the U.S. equity market over time. One of the biggest reasons investors gravitate toward VTI is its simplicity. Rather than trying to pick individual stocks or rotate between sectors, this ETF provides exposure to the entire U.S. economy in one single position. As the U.S. market grows and evolves, the ETF automatically adjusts through its market cap weighting and index rebalancing process. Because of its broad diversification, VTI is often used as a core long-term holding in many portfolios. Some investors even build their entire equity allocation around it, combining it with international or bond ETFs to create a complete portfolio. Of course, like any equity investment, VTI will rise and fall with the overall U.S. stock market. When the market rallies, VTI participates broadly. When markets decline, the fund will decline as well. But for investors seeking simple, diversified exposure to U.S. equities, VTI has become one of the most widely used ETFs available. And that's the Vanguard Total Stock Market ETF, ticker VTI. A single ETF designed to capture the performance of nearly the entire U.S. stock market. If you found this breakdown helpful, make sure to like, subscribe, and check out the rest of the ETF deep dives here on the ETF Investor.